also investing partially in the equity market. So more on that in a bit. But, Mahesh, I think we'll all agree that the fuel of any bull market ultimately is earnings, and that's what we want to talk to you about. But I know Nimesh has done a lot of, research on this in terms of consensus views on the street, expectations. So, Nimesh?
So, Surbhi, I'll go to the wall, but bottom line is we're expecting a weak quarter. So, the starting point is not something which we are too bullish on. So, in that sense, market seems to be, having a bit of a sense that this is going to be a weak quarter. So, I'll explain what the consensus view from the market is. So, for this quarter, broadly the sense is that this will be a weak quarter, but it will set a tone for a very strong September quarter. So, don't look too much into this quarter, but it will be a base for the next quarter. That's a broad consensus view. In fact, most of them are forecasting the Nifty 50 earnings to be 7 to 10%. This is going to be quite hurting because in the last 4 quarters, we've been reporting single-digit growth on the Nifty. So in that sense, it's going to be slightly better off. The low base of last year, as well as the early, festive season, is going to set the tone for at least the domestic companies in this quarter as well as in the next quarter. And what RBI has done with front loading of the RBI cut, there's going to be a potential impact on a lot of the financial names as well. So that's going to be a trigger to watch out for in the very near term and for this quarter as well. So that's overall picture. I'll go with sectors which are going to do well to start with. These are the 4-5 sectors which are expected to do well in Q1. Construction materials, which is basically the cement companies, they're expected to do well. Healthcare services, renewable energy and telecom services. These are the 4 sectors which are expected to relatively do better earnings in Q1. Now look at some sectors which are going to report only single-digit earnings growth in Q1. And that includes consumer durables and apparels, electric utilities, IT services, as well as gas utilities and transport sectors. So these are the 4-5 sectors which are expected to report only single-digit earnings growth in Q1. So that's the second set. The third set is where the street is anticipating a very weak earnings, and that includes automobiles, especially Tata Motors is going to drag the auto numbers down this quarter. Banks are going to report weak. Consumer staples are going to report weak numbers. So is gas utilities and transportation. So these are the 5 sectors which are expected to report weak earnings in Q1. Now comes the important part, which is some of the individual stocks. Citi puts out this note every quarter, and according to them, some of the companies which are expected to report positive surprises in Q1, which includes SBI Life, Britannia, Delivery, RBL Bank and Eicher Motors. These are the 5 stocks which Citi believes is expected to report a positive surprise in Q1. Equally, there are going to be some negative surprises as well in Q1 earnings, and that includes names like JSPL, Titan, which has already reported a weak Q1, Hyundai, as well as Tech Mahindra. So these are the 4-5 names which Citi believes are expected to report weak earnings. So net, this quarter earnings are going to be weak, but I guess that's going to set the tone for the September quarter, which is expected to be very strong. So that sums up. Mahesh, what's your broad view on